Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K filing, and let me tell you, it's more exciting than watching paint dry, mostly because money is involved and everybody loves money. We're looking at a report from API Group Corporation. This report is like a quick update the company sends to the Securities and Exchange Commission, or SEC, to keep investors in the loop about important events. Think of it as a corporate text message. This report is dated February 14th, 2025. That means the events it talks about happened on or around that date. Okay, first up is item 1.01, which talks about a material definitive agreement. That's a fancy way of saying they signed a really important contract. This is all about debt, specifically loans API Group took out. API Group DE King, which is basically a part of API Group, made a deal called Amendment No 7 inches to their existing credit agreement or loan agreement with a bunch of banks. This credit agreement has been amended or changed several times before, so this is just the latest update. Basically, they already had a loan agreement, but this new agreement changes some of the terms. The old agreement with all the previous changes is called the existing credit agreement, and the new one with this latest change is called creatively the credit agreement. What this amendment or change does is refinance their existing loans, meaning they're taking out new loans to pay off the old ones. Think of it like getting a new credit card with a lower interest rate to pay off your existing credit card debt. The old loans were called existing 2021 incremental term loans, and they were in UC dollars. They borrowed about $2.157 billion, and these new loans are called the repriced 2021 incremental term loans. They used the borrowed money to pay off some existing loans that were due in January 2029. The new loans also mature on January 3rd, 2029, which is the same as the old loans. So they're basically just swapping out the old debt for new debt with potentially better terms. The interest rate on these new loans is either a base rate plus 0.75%, or a term SOFR rate plus 1.75%. What this basically means is that there are two ways for the bank to calculate the interest rate it charges. The company also has something called interest rate swaps worth $1.84 billion. These are like insurance policies that protect the company from big changes in interest rates. These swaps will stay in place even after the loan refinancing. If you want to see the full details, you can check out Exhibit 10.1 of this report. It's the actual legal document for this loan agreement. Next up is item 2.02, which talks about the company's results of operations and financial condition. This is where they give us a sneak peek at how their business is doing financially. They released a press release with their early, not yet final financial results for the year 2024. So we get a glimpse of their sales, profits, and overall financial health. If you are interested, you can find all the details in Exhibit 9.1, which is the press release itself. Item 2.03 is about the creation of a direct financial obligation. In plain English, it means the company is taking on more debt, so this directly relates to the loan we talked about earlier. It basically refers back to item 1.01, where they talked about the loan agreement. So it's just confirming that this new loan is a real financial obligation for the company. Now we come to item 7.01, which is about Regulation FD disclosure. Regulation FD is a rule that says companies need to share important information with all investors at the same time, not just a select few. In the press release, they also gave their early predictions for how they expect to perform in 2025. This is called financial guidance, and it helps investors get a sense of what the company thinks the future holds. This section is saying that this information is being furnished but not filed. Filed information is much more strict and has higher liability. This information is provided as guidance and shouldn't be used in financial models for buying or selling securities. Finally, we have item 9.01, which is all about financial statements and exhibits. This is where they list all the documents that are included with this report. These exhibits or attachments provide more detailed information about the events discussed in the report. For example, we already mentioned Exhibit 1, 0.1, comma, which is the loan agreement, and Exhibit 9, 9.1, comma, which is the press release. The report was signed by Louis B. Lambert, Senior Vice President, General Counsel, and Secretary of API Group Corporation. He's basically the company's top lawyer and is responsible for making sure the company follows all the rules. So what does all this mean? API Group is refinancing its debt to potentially get better interest rates. They're also giving investors a peek at their financial performance and expectations for the future. It's all part of keeping investors informed and following the rules of the SEC. Now, let's step back and take a look at the big picture. API Group seems to be in a decent position, managing its debt and providing some visibility into its future performance. One area to watch out for is the amount of debt they're carrying. While refinancing can be a smart move, it's important to make sure they don't become too heavily burdened with debt. The $1.84 billion in interest rate swaps provides a good cushion against market instability. From a stock price perspective, API Group's stock price could see some positive movement if the company continues to deliver on its financial guidance and manage its debt effectively. However, any major economic downturn or unexpected challenges could put pressure on the stock. Based on the information in this report and considering the company's current financial situation, a reasonable price range for API Group stock would be around $30, $35. This is based on a review of current valuation multiples compared against peers and forward guidance provided in the report. Overall, I'm leaning towards a slightly bullish outlook on API Group. They appear to be taking proactive steps to manage their debt, and their financial guidance suggests continued growth. However, investors should keep a close eye on their debt levels and any potential economic headwinds. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please subscribe, like, and comment below. Let me know what other corporate filings you'd like me to decode.